And on today's video, we're going to identify the liquidity in the Forex market and how use the smart money concepts and how you can avoid using traps set up by the banks and the institutions so you can become a professional trader without the overwhelm and sacrificing time. Now, if you don't know me, my name is Pedro and I help Forex traders how to use smart money concepts to become professional traders without sacrificing time and the overwhelm. Please smash that subscribe button somewhere in the description of the video and give me a thumbs up, and let's dive into the charts. All right, we're at the chart here, and let's explain before we identify liquidity is formed. Let's understand that the market never moves in a linear way, right? The market creates patterns, an up move, uptrend, and then it creates these patterns, right? Which for most traders, they see these are W's or M's, and then it may create these downtrends, right? And then it creates another patterns such like these, all right? And then it may reverse and go again on an up move, right? Now, where you want to identify liquidity is, this is liquidity. Basically, this is liquidity or supply or distribution, and here is demand or accumulation. So this would be accumulation right here, and accumulation means that they are building, there's buying pressure to the upside. Distribution means there's selling pressure right to the downside. So knowing that, what the banks are doing, okay, the big banks, institutional trading, what they're doing, they're creating traps around here where distribution is formed or where accumulation is formed, right? And then we'll show you in just a minute on the chart how this happens. Okay, so stick with me so to understand this. Now, so here is where the money is building, right? The banks are creating M's and W's for most traders, retail traders. This is what they see, right? The money is accumulating here and they're creating traps, right? And if you are seeing an M on this particular distribution, you may see that the banks are going to sell. So yes, you may sell here, but if you see a W, the banks are creating traps, like I said. So now, knowing that, the same thing applies here on the accumulation side, right? Right here. So you get the picture, right? So this is where accumulation, distribution, and accumulation happens. Right. So now let's go right here to a chart, right? To AeroCAD and see how this plays out. And here's what we see, right? The banks created this distribution right here, higher highs and higher lows, right? Before the downtrend, right? Before the downtrend. Let's go into that 1 hour. I think it'll be easier. Okay, there it is. So distribution up here, accumulation down here, right? We'll see the patterns. And then down here, they accumulated, created more accumulation, and then they went on an uptrend. And now, if you lower to the 15 minutes, you'd see the same thing happening, right? There's also this now, accumulation or distribution. Again, we don't know until the banks show us their hands. So we have to wait for their move, right? And we use the banker strategy to understand these moves. Now, let's just bring here this to the 1 hour again. Okay, so understanding that, this accumulation and distribution, right, that we just went over, right? We usually use this strategy called the banker strategy because we identify what these patterns are. And I usually draw a box, so it's just easier to see. And as you notice here, let me just grab this line. As you notice here, there was this accumulation or distribution, and the banks created this up move before the down push, right? Right here. And what happens is it took a lot of liquidity that was sitting here because all it means, liquidity means money sitting there. And before the banks make their big move, they have to create money, build money here before they move the market. And that's what happens. So when you see this big move, you wait. The last thing you want to do is kind of like jump on it, right? Fear of missing out. You want to wait and see what the banks are doing. Usually these accumulations or distribution are typically done happens in interest points because that's how they move the market, the smart money concept, right? The banks are moving the market. So as you see here, we call this potentially the banker scandal, right? There's a banker scandal that moved the market, right? Right here, the last push down before the push up. So let's use this example here, right, as the example. So if the market came down, right, if we see here on the 1 hour, there was the last push up before the last push up before the push down. This would be the banker scandal. Now, what's happening here? I don't know. We have to wait. The banks are creating right here this, whether it's accumulation or distribution, we don't know yet because we don't know where the banks are going. Potentially, the banks may be going again an uptrend. But you really have to understand where the market is going. It's to see what is going on here. Maybe this possibly is a reversal. So if it's a reversal, what happens is the banks are going to break this. There's going to be a breaker structure. That means that they're going to break this line. This candle is going to close above right here. And what I would like to see is then a nice flag to the downside. Okay, so they break the structure and they could potentially come down and create a nice downtrend, nice flag, right? Not the perfect flag. And then they move the market up. And if what they do this so they can come and mitigate this candle right here, because was the last move down before the push up. Okay, but we really have to wait and see what the banks are going to do here. So, but at the end of the day, what you want to look for to understand liquidity is look for these boxes, right? Accumulation or distribution, right? To simplify this, right? Super simple. As long as you can identify these, you're like, okay, there's accumulation or distribution. You wait for the market. You wait for the banks to show you the hands. And then there's a correction and they'll come and collect their money because they had to fake it. They faked the market on the downtrend, right? They took liquidity right here. They push the market up and then they have to come and get their orders that they had to put in order to move the market up. And that's here is typically what you would want to get in and then basically follow the banks, right? It's really that simple. So I hope you got value. And if you did, you want to learn more about the banker strategy and how using smart money concepts can help you become a profitable trader in less time without the overwhelm of learning all kinds of different indicators and without sacrificing time, click the link somewhere in the description in this video that talks about the banker's strategy. Check your Facebook inbox, and I'll invite you to free trainings and hang out with our community. Over 3,000 traders that they are crushing it using smart money concepts and our strategy, the banker strategy. And talk to you very soon. Bye-bye.